Bill Baruch, president of Blue Line Futures, joining us now. And Bill, we've seen crude under a tremendous amount of pressure, to say the least, over the last several days. When we take a look at where it is today, 26.89, how much further of a downside risk do you think crude has at this point?
Well, today is the expiration for the options contracts for April, and sometimes you can get a sharp move in a directionally moving market. Sometimes it keeps things confined. Today, we got that move lower. I think that was something to do with options. We got the 26.05 level below here is one to really keep an eye on. As this all plays out, you don't want to forget that there is a price war taking place, and there's going to be inventory picking up, and that's what's driving the price down. So has the washout happened? I mean, we consolidated for a good week, but there looks to be another leg building here in crude oil, and that could drag the market as well. Now, we're not very bearish at this level, but we are open to the idea of seeing $17 crude oil.
Bill, I want to pivot a moment and speak a little bit about the press conference that we had with the Trump administration earlier today. And one of the things that they talked about is not of closing the stock market, that they do want to keep the markets open, but potentially limiting hours. And I'm just wondering what your take is on that and what impact that might have on market participants, the public, and going forward.
Well, talking among my colleagues and talking among other traders out there and clients even too, if they shut market hours down, I think you're going to bring a bit of panic. And I think as well, that's one of the rumors that have been going around is a 14-day quarantine and people have to stay inside their house. Ultimately, they don't want that rumor to be going around. And I'm not saying they won't come to that, but if you start getting these type of rumors where they're shut the market down, they're going to keep people inside their houses, that's creating panic. And overall, what we're seeing here in the market broadly is that panic playing out. So we like to look for peak panic as a point of capitulation, as a buying opportunity. They always say blood in the streets. That's when you want to buy. So are we going to continue to see some panic because of some of these moves? Overall, I don't think they're going to go the quarantine route. I don't think they're going to close market or really limit the hours. Volatility today, I mean, it's a pretty wide range out there across asset classes, but it's actually a little more constructive than what we've seen in previous sessions. So it's a good day so far. In the S&P, I want to focus on that for a second. The S&P is testing that December of 2018 low, and it hasn't broke down through there. It's tested about 3 times, maybe 4 times, and it's responded. That's constructive here in the near term. Now, a bottom doesn't come with a price. A bottom is a process. And we're trying to see that process get underway here today, starting from yesterday. Obviously, that panic coming out of the weekend. So there's some interesting price action here today. And for the S&P, I really want to see it get back above about 27.5. Closing above 27.5 would really start neutralizing that weakness we saw late last week and into the early part of this week.
Hey, Bill, just quickly as we wrap here, what do you make of the stocks that have been labeled the stay-at-home trade? There are some names that have done well amid coronavirus, even yesterday when there was so much blood. There's Clorox, there's Zoom. Today, ironically, Blue Apron is up 75%. Would investors maybe do better being wary of going after such names that are just getting a short-term bump? What do you make of all that?
Well, I looked at the heat map from yesterday early this morning, and Clorox stood out to me. Funny you bring that up, and my initial reaction is names like Clorox, you get that wave higher here, but is that sustainable? And I don't think sustainable long term. So if you're chasing that, names like that, you're going to find yourself hurt here in 6 months out, I'd imagine. But I do like those collaborative workspaces. I like software. Work got smoked last week on earnings. So it's actually been cheaper, and I use Slack personally for a number of chats. Yeah, Slack, and I think that's a great platform. There's other ones out there that are great. Things like Salesforce, CRM, other software. I don't think you're actually going to see those get hurt overall. I think they're going to come out of this pretty strong. And I think companies are going to use this to obviously stay together, but you're not going to see them limit their software because now people are more mobile. People need to be on the cloud. And I think that's going to be something to focus on over the next 6 months when you come out of this hole here.
All right, Bill Baruch, Blue Line Futures president. Thanks for joining.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.